Today we are in the office of the County of Wayne Tax Department. And sir, Alan Lumpkin, it's good to see you. How you doing?
I'm doing great, Wayne. Hope you are.
How long have you been director of the tax department here in Wayne?
Way a long time. I've been the director since my predecessor, David Ward, retired in 2014.
Right, that's just about 3 years ago. But you've been here in the tax department how long?
26 years.
So you've been here a while.
So I grew up here, yeah.
Yeah, that's right.
I did.
The tax department, man. Gee whiz, what do people come to you about? What do they come to you for? First of all, what does the tax department do? You send out notices?
We do. We are the main, probably one of the main revenue sources for Wayne County. We list, assess, collect taxes for Wayne County. And these are property taxes, not income taxes. This is on your property.
Property only.
Correct.
That would include real estate, that includes cars, it includes household goods.
Correct. Real estate, vehicles, your business personal property. If you own a business in Wayne County or any North Carolina county, as far as that goes, you list your machinery equipment, all your assets, all your depreciable assets are listed for tax purposes also.
And this is only for items in Wayne County. Now, if someone has a business somewhere else or they have a home somewhere else, that's another county's situation.
Correct. That's correct.
It's only for Wayne County.
That's right.
Airplanes?
Airplanes, yes, taxable.
Motorcycles, scooters?
Any licensed vehicle is taxed, and you know we changed it a little while back in 2013. We used to bill those here in our office, bill and collect those in our office. Now it's done through the DMV. When you get your little renewal in the mail, it has your taxes on there. When you go to DMV to get your tag, you pay your taxes and tag all at one time. That's one-stop shop now for that.
Which I can't believe that would not be popular.
It is.
It's got to be popular.
It's saved people from having to come to two different places.
Yeah.
It's saved in mailing costs for us and the state because they mail one notice now versus two or three. So it's good all around, I think.
It is good all around. You can't get your tags until your vehicle is inspected.
That's correct.
And you can't get your tags if your taxes aren't paid.
That's exactly right. You pay. It's all paid up front. See, the prior way we did it, which is history, but still, you would go get your tag, and then 3 months later we would send you a bill after the fact. And so a lot of times the people were a little slower in paying, and they would not pay that bill until the next year when they got ready to get their tag for the next year. So it was like a lag time there.
So this is really has to be good for revenue collection.
It is.
Money coming in. I imagine that our collection problems, if any, are down now because of it.
It is. I think prior, and I'm not sure the exact numbers, but I think before we had probably in the 80% collection range for vehicles in a timely manner, and now with this, it's pretty much 99%.
What is our rate, the tax rate? Does it vary at all, or is our tax rate the same across the board for everything?
The actual tax rate that we charge?
Well, when somebody sends in their tax bill with a check, that check is based on a percentage, and that percentage is based on what?
It is based. It's a two-part system. It's based on the value of the property, and that's the first key. And for real estate, we assign the values at our revaluation date, and the personal property is assigned the same way annually, and it's depreciated on the personal property. So we have a value to start with. Then the county commissioners or your city councils or your local government set a tax rate each year, and that's done usually in June. And that is applied to the value which comes up with your tax bill. And those rates they vary. Ours for the county has been pretty standard for the last couple of years. It's basically 66.35 cents per $100 value. Which is
one of the lowest in our part of the state.
It is very low. It's a
very
low rate. And then, like I said, each municipality has a separate rate. So if you live in a municipality such as Goldsboro, you would pay county tax and a Goldsboro tax.
Those who live in the city pay the same tax rate as those in the county for county taxes.
Correct. County rate's countywide.
Okay.
And then also, if you live in the county and not a municipality, you actually pay the county rate plus a fire district rate, and that covers whatever fire district you're in for your fire protection.
So you pay, if those who live in the city have to pay city and county taxes, and those who live in the county pay a fire tax and a county rate as well.
That is correct.
All right.
That's correct. Simple as it can be.
It is so simple. Why does it come across as being so difficult? What are some of the misconceptions people have about the tax department or their taxes?
Oh,
what do people think? Well, that doesn't sound right. What are some of the misconceptions?
I think one of the biggest, it's not a misconception, it's just not understanding the process. I mean, just like what we talked about, having the value and a tax rate, people just
Right.
don't understand the process we have to go through.
Yeah.
And it's all regulated by state laws, I mean, state statutes, and we're just like the other 99 counties.
Yeah.
We all under the same laws, we do the same thing.
You don't have any choice.
No, it's
It's
basically
mandated.
mandated. Correct.
You gotta do it this way.
That's exactly right.
But we set the rate.
The county commissioners and the city council set the rates each year, and that's done annually based on the budgetary needs of that particular time.
Right. What about reval? Let's talk about revaluation here.
Mm-hmm.
Every 8 years, we revaluate,
Revaluate?
reevaluate, something. We do something. We
do it again.
We do it again. Okay. Reval is done every 8 years. Tell me about that. Why do we do that?
Again, that's a state law, it's statutory that we do that, and
But
basically.
now some counties, pardon me for interrupting,
Mm-hmm.
some counties don't do it every 8 years.
You can do it sooner than that. You can actually do 4-year reappraisal
Okay.
cycles. And some of your larger counties, your faster growing counties, they'll do it every 4 years.
Mhm.
And what this does is it basically, at that snapshot date in time, which ours was January 1, 2011, that was our last one.
Mm-hmm.
We were gearing up for a new one January 1, 2019. What that does is for all the real property, it brings everything to market value. Whatever the market value is as of that snapshot date in time, it brings it to market value. And when I say market value, that's basically what's just buying and selling for. You know, the consumers set the market
Right.
by when they buy property. We don't just go out and arbitrarily put a number on a piece of property.
You just don't make something up.
No, it's based on actual transactions, actual sales, and they dictate, you know,
So
what
it's
the
not,
price is.
okay, there's a misconception. That some people may think that it's actually based on what the real value of the property is, but it's what it would sell for.
Well, that's
Which may not be the same, it may be
It
close.
could be close. It could be close because sometimes, and we call it an arm's length transaction. That's when you have a willing seller and a willing buyer doing a transaction.
Right.
Foreclosure sales, short sales, stuff like that, we don't consider those arm's length transactions.
Right.
So that we don't really consider those to set a market value.
Right.
It has to be a legitimate sale between a willing seller and a willing buyer.
So it's what the value, the market value is as of January 1, 2019, will be the next reval date
Correct.
set.
And the values we are on right now, if you have done nothing to your home since 2011, you're paying on the same value today as you did in 2011. That value does not change annually. It's based on, unless you make a change. If you add a garage or tear something down, then we adjust that. But if it's the same as it was in 2011, it's the same value. You're paying on the same value. The rate itself, it changes. It could change annually, but our value stays the same during that revaluation cycle.
So if your house was valued, let's just pick a number, $200,000 in 2011, then you're paying taxes based on a 2011 value.
That's correct. That's correct.
Even though your house may be worth twice that much.
It may be worth more, maybe worth less. In some cases,
worth less.
the value can go down some, but the law says we cannot adjust values in between the revaluation cycle for economic reasons. The economy, you know, it goes up and
Up
down.
and
It's
down
up and
all
down,
the time.
you know, all the time. It could be up, it could be down, but we're not allowed to adjust those values, and the reason for that is equity. I can't go pick your house out and adjust it just because you paid a little bit less for it or a little bit more for it, and your neighbor is sitting there and didn't buy or sell anything, and they're paying on a different value. So it's based on equity. And that's what we do, that's what a revaluation is for, is to redistribute that equity in the property. Everybody changes at one time, whether it be up or down. The commercial segment may go up more than the residential segment per se. So it basically redistributes that equity amongst the county and brings everything back to market value, whatever
That makes
that's
it
at
all
that time.
equal, it's all fair to everybody concerned.
Correct. Correct.
Okay. So what happens when the value of the house does go down, when it is reduced? You're actually, in 2019, you're actually going to end up paying less if your house is reduced in value, which I can't imagine that happening too often.
It does. It happens some, not a lot,
Does it?
but it does. I mean, we saw back in, again, going historical, we had a revaluation in 95 and in 2003. In both of those, we went up, I think, probably around 36% between those cycles, which is everything was booming back then.
Wow, yes.
And then in
Yes.
2003, we did our reval, and then 2011. In between there, of course, we know the big slump came.
Right.
The
bubble burst.
recession, depression, whatever you want to call it, happened.
It was very depressing.
But what happened though, we had to look at it. We weren't looking at that one snapshot when it bubble burst per se. We were looking at the 8-year cycle from 03
Right.
to 11. So what happened was that from 03 to around 07, it was still going up, up.
Right.
Then it came down. It didn't come back to 03 values though. We still had like an 18% increase over the 18-year period. And that was sort of hard to explain because, of course, the news media, national news was talking about the doom and gloom, everything was down. And we're telling people, well, no, your value went up a little
Went
bit.
up,
So but it went up from 2003 not from 2007 when the
Right.
bubble burst. So
Wow.
it was sort of hard it was hard for people to understand that, and we got through that, it's been growing. We've seen our economy coming back here in Wayne County. We're on the edge of it. You know, we have Wade County that's, you know, they're the first to react. The big counties react faster to
Wade,
down
Mecklenburg,
or up.
Guilford, Forsyth, those will all react.
When something happens, they react faster, whether it be bad or good.
Right.
And then it sort of trickles down, and we're at the point where Wade County's been recovering now for 3 or 4 or 5 years, and we're just now getting to the point where we're actually seeing the increase. Buildings coming back, things are picking up more now, so it's looking pretty
In fact,
good.
our unemployment's in pretty good shape now compared to what it has been last year, year before last.
Should be.
Much
I would
better
think so,
shape.
yeah, that's great.
And that's according to recent numbers that have been released by the Department of Employment out of Raleigh. So, reval, again, 2019. But let's get back to the paying of the taxes, when you send the bills out. When do you send this is a yearly thing. People have to pay their taxes
It's
each
an
year.
annual process. We start in January, we list the property, people come in and list what they own as of January 1st. We process all that, get everything valued. We try to send our bills out usually in August. Now, taxes are due September 1st.
That's when they're
By,
due.
by statute, they're due September 1st. However, there is a clause in there that says you have until January 5th of the following year to pay without interest or penalty. So
January 5th, due in August, so you've got several months to get all this
Of
together.
course, and a lot of people don't even, September 1st date really doesn't play into people's mindset because they don't even worry about it because they know they have till January 5th, so they think that's the date. But by law, September 1st is the due date.
It's due.
But you have until January 5th of the following year to pay without interest.
Without interest, without penalty.
Correct.
Okay.
Right now, this is our busy season. We're cranking up now. This is our busy season. We are, people are getting their stuff out now, getting ready to pay. We
I know
have.
you got my check.
Thank you.
Yeah. Hey,
Appreciate that.
well, whatever it takes.
I know that, when property taxes is one of the few things that you can still deduct off your income taxes. So a lot of people will try to pay by December 31st so they can use that for their income taxes for next year as a deduction. And then, so we have some people that try to pay by the deadline, of course. And then, of course, we have some that don't quite make it, so we have to work with them to get those caught up. And as far as the penalty side of it, what happens is if you don't pay by January 5th, then January 6th, there's 2% interest added to your bill. And that's for the month of January. And then for every following month, it's 0.75% for every following month after
Oh,
that
wow.
until it's paid.
Okay. So that takes care of the interest part of it, Alan, but beyond that, the interest or penalty doesn't come into play if they simply cover their tax bill by January 5th.
Correct.
Seems simple enough, doesn't it? And plus, they have, 3 or 4 months to get it all together, or 3 months
Oh, yeah,
anyway.
definitely. And really, you have 12 months. But what we found is, and what we encourage, we go to the senior center every year and speak with them about taxes and stuff. And what we encourage and what we allow is you can start in January. You can make prepayments. You can pay us $25 a month, $50 a month, whatever you want. So you pay up to August, and then when we get the bill, it'll have your original bill, how much you've paid to date, and then show your balance due. And so we have a lot of senior citizens, especially, that divide theirs up over a whole year and pay so much per month to us, just to so it's not a big bill at the end of the year for them.
Well, that's tremendous.
Yeah.
That is tremendous. So,
And maybe some people don't know that you can do that, but
I bet
you
you're right.
can. But
Yeah.
you can do prepayments. We allow that.
I hadn't even thought about that, but I guess that would help a lot, wouldn't it?
It
To
does.
prepay like that.
We have a lot of fixed income, seniors especially, and
Yeah.
they know what they receive every month, so they like to divide it up and pay a fixed amount every month.
Mm-hmm.
Sort of like I think you're allowed to do that on your Duke Energy bill, something like
Mm-hmm.
that. So you have a constant versus that big bulk bill at the end
Instead
of the
of
year.
all at one time. Well, that's great. It's great that you can do that.
Yeah.
Let's talk about people who do not have to pay property taxes. Is there anyone who is exempt from paying property taxes?
As far as exemptions, government buildings, churches, stuff like that, they can apply for exemption. Government buildings are pretty much exempt anyway. Churches, educational facilities, stuff like that. We have some hospitals that can apply for exemptions. As far as just your average citizen in the county, we do have a couple of programs that they're not exemptions. They may exempt part of your bill off, possibly. We have a senior/disability program. If you are 65 years old or older, or 100% disabled if you're younger than 65. if you have a limited income, and right now the income limit is $29,600. If you make under that in an annual year, and if you're married, it's both incomes combined, cannot exceed that amount. If you're a North Carolina resident and you own and reside in your own home, and that could be a stick-built home or a mobile home, either one, then you can possibly qualify for this exemption. And what you get in that is, if you do qualify, you get $25,000 or half the value of whichever is greater. So that
Whichever's greater.
Whichever's greater. So 25,000 or half, whichever's greater is what you get in that program.
And you have to meet all those points.
Everything. It has to be all. It's not just one. It's all
You
of
have to
them.
meet all of them.
Correct.
65 or older.
Or 100% disabled.
Or 100% disabled and younger.
And the income limit, and that's all monies received. That's if you have retirement, Social Security, any monies you receive during a given year cannot exceed that $29,600. And if you're married, it is for both husband and wife.
Combined, all incomes.
Correct. And the other one we have that's current, and these are state programs. This is not just Wayne County. This is a state program. Any county you go to has these same programs.
The state mandates a lot of these rules. There's
Yes.
very little that we have any
No.
choice of doing.
It's all governed by the State Machinery Act.
Yeah.
But the other program is the veterans. We have a disabled veterans program.
Right.
And basically that one does not have an income limit tied to it. If you are a 100% honorably discharged veteran with a service-related injury, whether you're disabled when you're active duty.
In service.
And it could be either the person, the disabled, the veteran, or a surviving spouse if that person is deceased and the spouse is not remarried. It could be either one that could qualify for this. If they get certified through the VA office, and they can help them at the VA office here in Goldsboro. And if they provide the correct paperwork, they can get an exemption of $45,000 off of their property value if they qualify for that.
Oh, great.
So
That's a big help.
those are the two big programs right now that people may not know about. That we have a lot of people enrolled in it, and it's good and it's not good. It's unfortunate we have people that are in that do qualify for these programs that are on limited incomes like they are, but it is a help to them for the property tax, so they won't lose their property.
Yeah.
Because we're not in the business
No,
we're not in
not
the real
in
estate
that.
business. The county does not want your property.
No.
We want you to just pay your taxes and everything be good.
How many people you have working in this department?
We have 17, and that includes our listing department, our collections department, our appraisal, our mapping. So we have 17.
17 people. Now, what are the various ways, if any, that people can pay their taxes?
You can actually pay, of course, send us a check. When you receive your bill, it has a Charlotte address as a return address on there, and what that is a lockbox. It goes straight to BB&T, to our bank. It's processed by them and put right directly into the bank. So a lot of people, when we first started doing that, said, why is my bill going to Charlotte?
Going to Charlotte, sure.
So they process that part for us. You can send it to us, basically P.O. Box 1495, Goldsboro 27533. That gets our collection office. We have a service that you can pay by credit card, and you can do it online at our website, or you can, there's a phone number, a toll-free number you can call. And there is a fee for that now, if you do that aspect. And there's a service charge.
For the toll-free number?
Yes, not for the number, but if you pay by your credit card for those taxes,
yeah.
there's a fee added to your tax bill, and that does not come to Wayne County. That's just a processing fee.
For the credit card?
That the company charges, correct.
Okay.
But they tell you that up front what it's going to be, and you can opt out if you choose not to do that.
Okay.
Of course, you can come into our office. We have a drop box on the street on Ormond Avenue that you can drop your bill in there. We check that daily, so you can drop it in there.
Okay, I didn't realize that. I guess you do, don't you?
Yes.
That's out here next to the entrance to the courthouse.
It is. It's right there beside, yeah.
Uh-huh.
It says tax payments.
Oh, okay.
So that's us.
I should be reading that sign.
You walk by it every day, don't
Oh,
you?
I buy it every day. I don't see it. But anyway.
That's us.
Anyway, but anyone with a question can call you and find, or they can come in and talk to you
Certainly.
about it. You'd
Certainly.
love to have people come in and ask
Certainly.
and inquire.
And we have a lot of information on the website. They can basically check there also. And
Okay.
most everybody has computer access these day and time, so they can check on there. And
And is that still under WayneGov.com? or is there
WayneGov.com, and
another-
then go to our tax department, and everything's right there.
Okay. Go to WayneGov.com and then click on Government.
Mm-hmm.
And then under that, you'll find Tax Department.
That's correct.
All right.
That's correct.
Alan Lumpkin, you're the director of our Wayne County Tax Department. Man, this is great information.
Thank you,
I
sir.
appreciate it. Thank you.
Thanks for coming and visiting with us.
Sure thing.
Appreciate it.